Hello and welcome, traders. Let's get into the recap for Friday, October 27, 2023. Let's see where we finished the week, what the markets did, what we did with some trades, and how the portfolio fared for the week. All right, and pardon my voice, a little bit scratchy, but we'll make it through. So let's take a quick look what the SPX and SPY did yesterday. We dropped about 20 points on SPX. Overall, a pretty flat day. However, if we take a look at what happened, we gapped up at the open on the session, slowly tailed off till about 1040 or so, rallied back up to about 41.56, and then just saw the markets just tail off to the close. A little bit of a bounce right at the very end here. It was a good day overall to be doing some trading. Unfortunately, was in the hospital getting a little bit of a procedure, so did not get a chance to trade the 0DTE. But when I did get home, I was able to close some winning trades. But some good opportunities, I think, in the market during the session. But you can also see that on the advanced decliners here, pretty much was telling you exactly what was going on in a very simple way. And I use UVXY a lot to determine direction. And, once you hit 1230, which was right around, I don't know, this mark here, when we kind of broke the previous lows of the day, that's when UVXY really started to pick up. And that was telling you that starting here right around 1230-ish, that once you break above this 50 moving average here, it was on, and it moved up into the upper 19s, which is pretty high, which gives you a lot of selling pressure. So that's something else that I watch on a daily basis. So there's what the market did on the session. Let's just zoom out and take a look at what things are doing, and we'll start with SPY as always. So if we get into the weekly trades here, we remain in this downtrending channel. However, on the week, we did break below the bottom of this downtrend channel. So pretty bearish opportunity here. If you're looking at MACD, it's just accelerating to the downside. RSI just heading down. We are in a solid bearish trend here. And even if you try to look at where the markets were, coming off of this previous October low, I mean, we broke those, back here in a week ago. We broke that uptrend line. So that long-term uptrend that we've been in really since October has now been broken. Now, we still do have a series of higher lows overall in the weekly, but then you've also got these lower lows and lower highs in the short-term effect here. So breaking the downtrend line a bit, we're still, we would need to fall below this 380 to really get something cranked up. But our previous pivot level here did not hold as we broke through that on the week. So if we zoom over here to the daily, you can definitely see this downtrend channel holding itself in place. We couldn't hold this support here, so I'm gonna leave this on, because this could flip now from a support level, which we held a couple days and then just broke it Thursday, Friday. This may flip itself now to more of a potential resistance level next week. We'll see what happens. But MACD has been falling. No surprise here. As soon as we hit the top of this channel, this was the perfect time to put on hedges, sell call spreads, whatever you wanted to do. As you move through this channel, when you get to the bottom of the channel, it's usually the chance, if we bounce, to sell puts, put credit spreads, something along those lines. And I'm not saying just, breaking through this on a day or two is an absolute killer. But if you look, we are oversold on the RSI here. So that's a good sign. MACD has not begun to turn itself up, and the RSI is still falling into oversold, and we're not oversold on the weekly, which means there could be some more downside pain to go. How much? I don't know. I think that's to be determined, but you've broken through the 2 ATR here, which is this red line, and then you bounced right off of the 3 ATR on the on the daily. So you are definitely in an oversold area. Would not be surprised to see a bounce, but we definitely have some events coming up next week that we're going to have to pay attention to. So as we take a look into next week, we'll see what happens. But you've got a lot of stuff happening in the markets, and we'll take a look at a few of those things coming up. But big, kind of a big week next week on the docket. So we'll see what happens. But I think on Tuesday, you get unemployment cost index, you get some consumer confidence. Wednesday, you're going to get the JOLTS report, ADP, non-farm employment, as well as the FOMC release of are they going to up or down the rates and what that statement's going to be afterwards. So that's on Wednesday. And then on Thursday, you get unemployment claims. And then on Friday, we're going to get average hourly earnings, unemployment rate, ISM services, PMI. So there's a bunch of things coming up next week that we'll keep an eye on. Lots of news, but I definitely think you're short-term oversold. In the weekly here, you're just still in this downtrend and you're not in an oversold area. So I don't know that any bounce here is going to have much of a lasting effect for now, at least. But we'll see what happens as we continue to work down. But that's my take on SPY. If we look at the Qs, pretty much the same scenario. Weekly just looks terrible, breaking below the downtrend line. And if we take a look at this now, you can fuss around here, maybe try to redraw this channel a bit. So depending on how you do it, and again, you can make technical analysis fit whatever your narrative might be. This is a little bit more of a decent looking channel, I think, if we pay attention here. So this channel looks good. In fact, I could probably back it out even further. This channel is a pretty good channel on the bottom here. But we've hit it a number of times, hit the top of the channel, bottom of the channel, top of the channel, not quite the bottom, bounced again. We're not quite as far down. Now you are past the 2 ATR and just above the 3 ATR here, but we are above the 200 moving average, and there's a pivot level here. That same type of pivot level, we have not gotten to it yet. On SPY, we did. So on SPY, we've broken the 200. You've broken that pivot support level here. We've broken through the bottom of the downtrend channel, but on the Qs, that has not happened. So the Qs are in a little bit better shape, but we're not in oversold territory on the Qs like we are on SPY, but that's again because we haven't really broken through these channels and these supports. So we'll see what happens, but you had this big candle on Thursday and an inside day on Friday, which is pretty interesting to see. Does that mean we potentially have some opportunity to reverse next week? I don't know. We'll keep an eye on it. And then IWM, it's breaking below all of the channels, supports. It's heading down lower, and you're getting now into oversold territory on IWM. How far down can it go? I don't know, but this is where we have previously bounced off of, but a pretty strong down day on Friday. So there's where the overall markets are. I mean, you could be setting up soon for a bounce. I don't know that that's going to be a Monday or a Tuesday thing, and obviously the events in the Middle East will have something to do with that. We'll have to keep an eye on how things go over the weekend here to see what exactly we're going to come into on Monday and Tuesday. But I think if you get any weakness or sideways action Monday or Tuesday, you could be setting up for a bounce later in the week. Maybe that's a pause by the Fed, some Fed statements, maybe some change in some of those payroll and other numbers that we get. We'll see what happens, but I think payroll has a lot to do with it. You've got to see some weakness in the markets, and you didn't really get that this week out there. So economy still perking along pretty good. VIX moved its way up to 21 and change, still not extremely high, still just slowly moving higher. So volatility just eking higher, but you're talking a 21 VIX. You're not talking a 30, a 28, a 40 VIX. You're talking a 21 VIX. Now, because we've been so around 13, 14, this is definitely elevated. So we do have some, increased volatility in the market. If we look at the US dollar here on the day, pretty much just a sideways session. Didn't really do anything at all, finished relatively unchanged on the session. So dollar continues to just move sideways in this consolidation channel here. And let's jump to rates first. Rates are still, in this kind of overbought territory. You're really bouncing around this 2 ATR for a couple of sessions. Now we've fell down. So you saw rates drop, really being unchanged session on Friday, but just off, did not try to make any attempt at moving up. MACD falling, RSI is falling and continues to fall. So again, I noted this divergence to you guys quite a while ago, at least a week or so ago. We've been talking about this divergence in rates that we're not, when we got to these highs, RSI was not making new highs, and MACD has also been falling on the daily. So how's that affect the TLT? Well, TLT on the session did pull back fractionally, just consolidating down here along the bottom of this wedge that we're in. So you've got this wedge pattern. There's two different downtrends here that I've been tracking, both pretty valid. Both would need to be hit or broken for us to move higher. One's a little longer term, one's a little shorter term, but either way, you're in a downtrend. Bearish PSAR, however, any kind of a bounce to 85-ish or so, or some more sideways movement on TLT could be interesting. You can see RSI is rising here, but we're not really getting the benefits of that. So RSI is rising, MACD is rising on the daily, and you're oversold on the weekly still, trying to make a turn. Is this the bottom or the lows for TLT? Bonds, time will tell. We'll see what happens. I have cautioned you about getting long at this point. Okay. I'm still going to caution you about getting long. I'm okay missing some of the move. I don't have to call the exact bottom. I've tried to keep you guys out of this for several weeks to months here, just telling you, just hang on, wait till we start to get some indication of a move. Now, we keep seeing on the weekly, MACD will start to reverse, and then it'll get worse. Start to reverse. So, a 1 bar week doesn't do it. I've got to see a couple bars in a row, which we did get here, and then it just fell off the cliff again. But you can see that RSI has been falling. So this is a pretty oversold reading in here. And with these new lows, we were not hitting new lows on RSI on the weekly. So again, all of these things pointing to potentially some opportunity for TLT to start basing and bottoming. I'm not going to call for this thing to run up to the hundreds anytime soon. However, it is a good opportunity, I think, in bonds to start selling puts in here, and that's exactly what we're doing. All right, let's take a quick look at 6A. What happened with the Aussie dollar yesterday? Slight update on the session. 6B, the British pound, pretty much a flat sideways day. MACD still falling and a little bit weak. And then Canadian dollar has just been getting murdered in here. So Canadian dollar is just getting killed. It is now heading into oversold territory, but it's definitely not hanging in there like the Aussie dollar, the British pound, and the euro. So euro is still my favorite of them all. It's breaking through the downtrend channel. RSI has been moving higher, broke to 50, couldn't hold it. Let's see if it gets any momentum. MACD has rolled over. So the daily is a bit weaker. The weekly looks like it's trying to base and start to try to recover here. So just this long sideways consolidation. I think you just got to keep an eye on this range. And if you break this range to the upside, I think things are in good shape. If we break it to the downside, I think you got some additional concerns or problems. So I think just staying right in this range from the 105.2 all the way up to the 106.5 range, just staying sideways in here. I think it's perfect area to start selling some strangles, some other things, as we could go either way, but you've got a decent widening Bollinger Bands and Keltner channels here. But as things get tighter here, you're going to start to lose some volatility in it. So I'd like a 112 in 6E as well. I think that would be a good opportunity. All right, bonds. We've already covered bonds a bit when we talked about TLT. But here's what's happening in bonds on ZB. So on the 30-year, which is the longer duration, we still are maintaining this descending wedge pattern that we're in, although we did try to break above it yesterday, but failed. So you're trying to make this break on bonds. Even though bonds are off on the session yesterday, I'm still selling naked puts here on bonds at this level. I like the consolidation that I'm seeing in this, with the weekly oversold, with the daily starting to move higher, MACD moving higher, and RSI. So I do like where we are on bonds. I'm not ready to say jump in and go crazy yet. We still have a downtrend to break. But the longer this moves sideways and the longer time goes on, the closer we're getting to breaking this particular line. And we'll see what happens. So we're well off of these lows where we broke the 2 ATR, bounced a bit. We had broken the 3 ATR here, ridden it down, and then moved back into the 21, which is your reversion to the mean on it. So are we going to revert back to the mean here? And then really from here, it's going to be what happens. I think if we hit the 21 and can start to break through it, I think you get a good chance to at least run up to the 113 level here. I like where we are on bonds. All right, oil. Oil continues to be fairly weak, even though on the weekly here, you've been in this up channel for quite a while now, dating back to June. MACD and RSI have just been rolling over. So oil has just continued to be weak. It had a pretty good down week on the session. And when we really zoom in, and I know there's a lot of lines on here, so I apologize for that, but I don't want to clean up these charts too much. You'll just have to deal with it if you like these reviews. But MACD trying to recover, RSI trying to recover, but you did break down through the 21, came up, failed at it, broke down through the 50, but then just started to move sideways in here. We came down, hit the 3 ATR back on the 5th, reverted back to the 21, which is your mean, broke above it a bit, and then came back down. But just good sideways consolidation on oil. I have been selling naked puts on oil. And then with the Bollinger Bands and the ATR being as big and wide as it is, and volatility being excellent, and here's volatility. Again, another increase in volatility on Friday. So the weekly is just, look at that. Look at this volatility going from 27 to 40. It's almost doubled. The volatility in oil has doubled since 9/11. So since 9/11 back here, we have doubled from essentially 23 to 48. Big move up. This is beautiful for premium selling. I'm doing strangles. I'm doing naked puts. We've got 112 trades on. Right now, I think oil is one of the best vehicles. The only thing that you have to be cognizant of, I think, on oil, if we get back into this, is with what's going on in the Middle East, I think the risk is all to the upside. I don't really see a lot of downside risk here. You've got, even though you're broken through the 21 and the 50, I think you've got a lot of stuff to chew through, and I think you have a lot of reasons for oil not to fall a whole lot further here. So even though it's in a downtrend and I think it's weak, I mean, here's just another pivot level that we can look at here. No, so I know a ton of spaghetti on here. I apologize for it. But if you look at this level dating back here as well, right around 77 and change. So I think you've got plenty of support opportunities in oil. And we've also been bouncing off of this this level in here as well. So let's just make this worse, since you guys already can barely probably read this. Let's just make it even worse. I hate it when they get this busy. I can see it. I'm on a bigger monitor. I know it's harder for you, but this previous support level has held once, okay, twice, and then does it hold again? So 82 could give us some support. 77 can give us some support. You get the 200 down here. Bollinger Bands and the 3 ATR in the 70s, and fairly wide. I think as you start to get these narrowing, they're also going to act as support. So I do like oil in here. I think this is the time to at least be putting on naked puts, potentially some strangles. Just give yourself room to the upside here. Oil could definitely, on something happening in the Middle East, could definitely skyrocket quickly. As much as this week dropped from 92 to roughly 91 to 81, so a 10-point drop in a day. But sometimes you can see as much as a 5 to 6 point rise in a day, and you can definitely see that we went from 80 to 91 in in 3 weeks here. I'm sorry, not a day, in weeks, but you can get a move from 84 to 89. 5 points in a day. This thing can swing. This one moved from 83 up to 87. So you can easily in 2 to 3 days be back, to close to 100 on this particular thing if something goes awry in the Middle East. So 112s are perfect for that because you are you have no risk to the upside at all, and you're pretty far away on the downside. So even if we slip a little further, fall into a trap, I think it double pays and you're in good shape. Gold, very resilient. So gold's hanging in there. Let's close in on this. Is a little easier to read spaghetti when it's easier. You've been in this gold downtrend, broke out of it 2 weeks ago, moved up even more this week, and the weekly MACD and RSI very strong. Gold having a pretty good up move on the weekly. Gold looks very bullish here on the weekly. If we're looking at the daily, I think this is where you have to temper things a bit. MACD has been rolling over, but you're hitting new highs. RSI is also rising. So RSI is hitting new highs with this recent highs. So you're no divergence here on RSI, a little bit on MACD. So momentum may be coming out, but it's really not showing up too much. So gold still very, very strong as a flight to safety type asset. And if we take a look at gold volatility, you can see that this thing has been rising. Now it came off, a lot of the volatility did come off from 20 down to 15. So we lost about 25% of our volatility earlier in the week, and then made up about half of that. So we're still moving pretty well up in volatility. There's still good gold volatility. I think, again, the upside is where your risk is. So 112s, naked puts, things like that, I think in gold are good opportunities. And then we like our copper trade. We talked about this the other day as well. And again, on the weekly, this thing broke to the downside of this triangle. However, came down and hit this previous support level, and it has held there really for 4 straight weeks. It's held that level. This week we did bounce off it a bit back above the 21. RSI is moving higher, which is nice to see here. MACD's been moving higher, so I like the move in copper. And I think copper's in good shape. We've got a 112 on that. It's extremely profitable right now. So there's our copper. Let's take a look at where some of the sectors closed on the Friday session here. Your big winner was semiconductors, up 2.5% on the day, trying to bounce off of this oversold level here on the daily. So semis trying to get a little bit of a bounce here past the 2 ATR, not quite to the 3 ATR, but getting a little bit of a bounce. XLY, which is your consumer discretionary. This is your Amazon and your Tesla, trying to get a little bit of a move higher here on the session, bouncing off the 3 ATR from Thursday back to the 2 and so forth on Friday. So XLY up fractionally on the day, and then XLK. So this is your, sorry about that. This is your tech stocks here, just bouncing a little bit off the 2 ATR on the session. Still weak on the weekly in this downtrend. So we've just got to keep an eye on this trend as we head downwards. Here, we'll see what happens as we get to the bottom trends, just like the Qs. Then your weakest sectors on the day, biotech, just having another horrific week. Biotech broke through some support back in here. We can probably even take that thing off, but we'll use it to watch for any kind of a resistance area. But you're not getting any bounce. You've had just like 7-8 weeks of just pure selling in biotech. This thing has been a horrific trade ever since July. It's only had one small 2-week bounce. And then for the most part, every single week in biotech is down. And then energy also having a very poor day. We've been talking about energy now and how bad it looks on the weekly and how bad it looks on the daily, just continuing to fall. I think you got a little bit further to fall on this thing, and then you start to look for potential reversal areas. Reversal trade's my favorite trade of all the trades. And then if we also look at what happened on the regional banks, regionals also not performing well. I mean, this thing overall looks terrible. So having the regional banks really struggling in this environment is not a good sign for the market. So there's where we are on the different sectors. Taking a look at some of the trades or the individuals. Now, Amazon, good earnings, had a good pop yesterday, right back up to this downtrend line at the top here, remains in this channel. So we'll see how this moves, starting next week. Really good reversal on RSI. Let's see if it can get above here and get some momentum to the upside. Does Amazon help this market recover? All we did was get to the 2 ATR and revert right back to the 21. So reversion to the mean on Amazon. If we take a look at Apple here, down to the 2 ATR, hit the 3 ATR on Thursday, and a little bit of a bounce in here, getting oversold. So the weekly still looks horrific. So terrible looking weekly chart on Apple heading into earnings next week. So on the 2nd, so we get Apple earnings next week on top of the Fed announcement and some of those other things that we talked about. We'll see, can Apple help save this market at all? Riding this downtrend here, maybe a little bit of a bounce. We'll see what happens. Can Apple get something going? Microsoft, decent earnings, but fell off of its highs. So, breaking out, let's take this, we'll leave this on, this little short-term uptrend, good gap up after earnings here, then a big sell-off Thursday, and then just a little bit of an up day. So again, you had an up day, but the markets couldn't hold it. So your Magnificent Seven all had pretty good days on Friday, yet the markets, turned in some losses. I mean, the Qs were up 0.5%, but SPX or SPY was still down. So the Magnificent Seven could not keep this going, and everything's riding on these because there's, if we look at Amazon, you're right back up here close to the 21 EMA. Overall, it's still up on the year, even though you get this little downtrend going. Apple, pretty good little pullback going here, still up on the year as a whole, but it really gave back a ton. I mean, Apple was all the way up here at 200 roughly, and now it's back to 168. And then Microsoft here had given up quite a bit from about 370 down to about 310, and now back to about 330 and change. So they're well off their highs, but they're also off of their lows. I think really what we've got to just keep an eye on what things are happening here. I think you had this break of this wedge. Can we hold it and move higher on Microsoft? But if we get any kind of a collapse on these Magnificent Seven stocks, you could be into serious trouble here. So Meta breaking below on decent earnings, poorer outlook, some misfortunate words on the conference call, and that's all it takes, which is why I hate stocks. This is why stocks suck. Okay, you can beat earnings all you want, but if somebody says something like softness or weakness, if you hear any of those words on a conference call by the CFO or anybody else, stock gets smoked. Had an up day on Friday, tried to recover a bit of its losses, but overall still weak. But up 8 points on Friday, back to the line, but MACD and RSI just falling here. But it hit the 3 ATR, reversion to the mean, could pop to 307. We'll see what happens. Google's hanging in there on this serious drop, poor earnings, got smoked again. You usually want to give these things at least 3 days. So this is the day 1, day 2, day 3. So it's just hanging in there right now, in my opinion. If you look at the weekly, it dropped right to the 50 exponential and managed to hang on to that and bounce a little bit off of that. If you look at the daily chart, and we filter through some of these lines that are on there, it gapped below the 2 ATR, hit the 3 ATR, and then 2 days below the 3 average true range. Pretty rare that you're going to stay outside of the 3 ATR for long. Again, there's no oxygen out here. You got to come back in the capsule in space, as I kind of point out. RSI definitely oversold on the daily. The weekly absolutely looks terrible. This thing can continue down. Maybe we fall further in here. We'll see what happens on it. But I would expect some sort of a bounce on Google if the market bounces here. I'm not going to catch a falling knife yet, but if you were, there's two pretty decent looking reversal candles. We finished well off our lows on Friday, even though we had a down day in Google. NVIDIA is going to hold the fate of the market, I think, here. You got Apple and NVIDIA. You got Apple coming this week. You got NVIDIA coming in 2 weeks. I think that's, what's the date on NVIDIA here? That is the 21st. So you have about 3 weeks till NVIDIA, and next week is Apple. Head and shoulders pattern, left shoulder, head, right shoulder. You're right at the neckline here. If we cannot hold 400 on NVIDIA, I still think testing this gap, and again, apologize for my voice. What happens when they stick a tube down your throat during anesthesia? But if we break the 400, I still think filling this gap is in the cards, and that would absolutely be this neckline from 400 to 500. The drop would be to maybe 300 if we break the neckline, which would definitely fill this gap. I'd like to see it, get this over with, and then let's see what happens in the market. Weekly falling, daily falling. Things do not look great on NVIDIA. And if anything weak comes out of this in a couple of weeks, that will not be good for the overall market. And then Tesla down here, breaking the 3 ATR as well, but very oversold. I think Tesla setting up for at least a short-term bounce. On the weekly, I think this thing has lower to go. I definitely think we can head down maybe into this range, 160 level in here, but I think Tesla can definitely go lower. It's trying to hold on to the 200 moving average here on the weekly, but breaking through the support. You're at the 3 ATR though. I think any reversion to the mean, maybe a little bit of a bounce to 230, and then I would look for any rollover. So this is where I would potentially maybe do a very short-term naked put credit spread, put spread, something like that. If we get anywhere up in the 230s here where the 21 is, I would be definitely wanting to put on some kind of a call credit spread. But right now, I don't think I don't think shorting here makes sense at an overextended level. Okay. I also don't think going all in on a huge bounce is the key here, but maybe a put credit spread, define your risk, see if you're going to bounce or something in here. But any bounce, I would expect to be sold off, and I think that takes you lower. All right, so there's where we are on most of the stocks. Let's jump in and see what the account did, and here's where we finished today on Friday. So Delta moved up 923. So our Delta is a little elevated, 0.31. You're going to want to bring that Delta down. That's a pretty high Delta. We've been very Delta neutral, which has been perfect, served us very, very well on the last couple of weeks during some selling here. And again, SPY has really been selling off now since the end of July. And the last 2 weeks have been two of the most severe weeks we've had. And we've hung in there. In fact, in the last 2 weeks, we've gone from a net lick of 284 to 301 in 2 weeks. So our net lick continues to climb, but So does delta, and we got to keep an eye on that. So our delta is a little too positive because the market has been dropping naturally. We'll look to put on some negative delta trades or take off some positive delta trades to get that fixed. Theta is up at 2093, so up at 0.69. Theta is great. We love theta. But when it starts to exceed, now again, my target theta is at least 0.4. I want to have that, 0.2 delta, 0.4 theta. That's my minimum on theta. Obviously, we're above that. But if your theta starts to get way, way, way high, I know some people say, oh, isn't that the goal, is to get your theta up as high as possible? If your theta starts to get a little, like 0.7 is too high. 0.8 is too high. And what happens at that point means you've probably got too much risk in your portfolio. You've over leveraged yourself for theta. You've sold your soul for theta. And essentially you can see by our BP use being up at 80, now 86%. BP use, we've definitely sold out on theta. Now, a lot span margin increases because we're trading futures, totally understand that, which is why I'm not in any kind of a panic mode at all. I know I can easily adjust this down if needed. And if we get a bounce day or two, like we had on the 23rd and 24th, I mean, look at 23rd and 24th when the market moved up. And look, we went from an 80 to a 79 to a 78. So just when the market starts to move up, BP will start to self-correct itself a bit. However, volatility is high. I mean, VIX is high. The volatility on oil, volatility on gold, volatility is moving higher, which is going to put pressure on span margin, which is going to put pressure on BP. And right now we've sold our soul for a lot of theta. And I'm not panicky about it, but I do want to keep an eye on it. Anyway, net lick on the day dropped a fraction, 305 to 301. We were almost at an all-time high, and then we just kind of came off that the last couple sessions a bit, but it bounced back great Thursday and then Friday. But we did close another $2,450 in trades on Friday, so another $2,400. And this is while we were under anesthesia. So when you got your portfolio set up properly, it runs. You don't have to be monitoring it 24/7 on here. It works its way for you. So yes, I was technically under anesthesia for hours, and we made money. So how great is that? That took our weekly realized profit up to $10,646. That was a 1 week. So we got a 1 week gain of $10,646. That going back here, I don't think I've seen a bigger day. So I think that's like one of our biggest weekly days that we've ever had, or weekly gains we've ever had. So this is realized profit, $10,646 for the week. Fantastic stuff. We're up 15 grand for the month, over 5% realized gains for the month. And if we take a look at, we'll adjust this for Friday. So we're up about 2% in net lick for the month, which is actually not bad considering when we take a look at the market. So when we take a look at the market for, for 1 month, SPY's down 4% for a month. Okay, so if we take a look at this thing since, really the first of the month, you're down, 4%, 3.9%. So we're down 4% in SPY, but yet we're up 2% in our net lick, and we're up 5% in realized gain. So fantastic. This stuff works. Let's take a look at what did work and how we were able to achieve that. And here, here's what we closed on the day. We had a PDS close. So we had already, this is one of our 112 trades. So we had October 31st, long-term 112. We closed the naked put way back on 10/19. And then on 10/23, we rolled down the long puts. And then today we just closed the puts. I mean, there was a 25 wide put debit spread that expires on the 31st, but I was able to close it for 24.50. The max was 25. I closed it for 24.50. Again, taking out more money. So we've not only closed the naked put for a win, okay, and I think I popped it in here somewhere in the Discord. I don't know if I can find it really quick for you. I hate to do this too much, but let's take a quick look here. Right here. So here's how this whole trade went. So we closed the remaining put debit spread for nearly perfect 24.50 out of 25 potential credit. We'd already made 2 adjustments. We'd already closed the naked put there. So we already took 95% out. And then we also rolled down the long put for a credit. Okay, so far we opened this thing for a $23.50 credit. We closed the naked puts for $1, so we banked $21.50 on that move alone. Then we rolled the put debit spread down, shrinking the trap, banked another $1,500. Then we closed the 25 wide today, Friday, for another $24.50. So the total income on this trade was $6,125, as opposed to making, $2,000 in the tail. We booked $6,000 by managing this trade perfectly. So a good win on there in the Discord. Again, if you make $6,000 on one nice trade, that pretty much pay for your memberships, I think. So good trade overall, managed it well, and had a great day in the market. So huge day, sticking to our plan, letting it work. It runs even when we're not there. Things work out, and we're in great shape. So having a fantastic month. We got a couple more days left. We'll see what happens. All right, you guys stay safe. Have a safe weekend. We'll see you guys all on Monday. Take care. Bye-bye.